Well, guys, at this point in time, the stock market is just starting to get funny, okay? It is just starting to get hilarious, okay? The Dow is up again today. The S&P 500 is up again today. The NASDAQ is up again today. Is this even real? This is unbelievable. It's all up again. And this comes just after yesterday. The market was up a bunch more and a ton of stocks were up huge. Like look at Tesla yesterday. Huge day for Tesla, right? Up 7.5%. FB was up 3%. Tons of stocks made huge upward moves yesterday. It was a green day yesterday. And here we are today. It's the same exact thing. Another green day yesterday. And the public account made over 18K, okay? And it's one of the best days in the history of the public account. For absolutely no reason. There were no earnings from any of my companies. There was no like big news and great news for any of my companies. And it was over an $18,000 day just in the public account yesterday. I don't know what I made yesterday. It might have been 30K, 50K across all my different accounts. It was unbelievable. And it's another green day. Like you would have figured, okay, today would be like that day you give back some, right? I mean, the market's just been so hot. It's got to at some point just go down, and it just goes up. I mean, it's unbelievable. The Dow, the S&P 500, NASDAQ, they just won't quit. It's crazy. And so you must be thinking there's got to be a ton of good news out there. I mean, for this market to keep pushing up, we got to be like just loading up on good news on top of good news. Well, we have a lot of drama across the entire United States of America right now. Cities pretty much kind of in like chaos right now, like absolute craziness, like stuff we haven't really seen in American cities in quite a while to this scale. And that is forcing a ton of these cities and businesses that just opened up very recently over the past couple weeks to actually start closing either early or closing completely. And you know, that's just, you know, that's a whole situation in itself, right? What else do we have? You know, there must be some other good news, right? Because that's definitely not good news. Well, negative interest rates could be needed for a V recovery, Fed economist says. Basically meaning they're thinking about the possibility, and don't be surprised if this ends up happening. You know, we'll see what happens over time, but don't be surprised if over time we end up going to negative interest rates, which essentially means like you get paid to kind of like take out a loan, which is absolute craziness, okay? So you have that news come out today, and that's like, I mean, you know, is that really good news? I don't really think so, okay? Embattled Wells Fargo cuts back from making loans to independent car dealerships. This is some other news we got out here today. So essentially meaning Wells Fargo is cutting back on their loan programs through a lot of these car dealerships, which means that's one less loan company out there, which is good news in the respective, you're thinking about like taking out risk, but at the same time, if these car dealerships want to move cars, they need as many big banks in there as possible, as many lenders in there as possible, so they can get people financing, right? I mean, you know, the car dealerships are in a tough time right now. The automakers are in a tough time. And this just comes after, right? Home loans got a lot harder very recently. Over the past couple months, almost all the big banks out there, they made much more strict guidelines for if you want to try to get a home loan. It got a lot harder very recently. You need a higher credit score than you did before. You need more income than you did before. Basically, it just got harder to get a home loan very recently. And so we still got to see how this whole thing affects the real estate market, because once again, you know, a lot of people have gone in forbearance and some of those sorts of things. We still don't know how that's going to all shake out. Meanwhile, what else do we have going on out there? Well, more not good news, okay? Rona ravaging. The cases are up to 6.28 million now global. US up to 1.81 million. I mean, they're talking about, you know, we could be over 2 million by the end of next week. And so a lot of big cities have actually shut down their testing. So, you know, who knows, that number might actually be a lot higher than that, okay? Auto research firms expect new vehicle sales to be slightly less than 1.1 million vehicles in May, down by about 32 to 33% compared to May of 2019. Unbelievable, okay? Imagine that, a third of auto sales cut year over year, okay? That's extraordinary. While better than expected, the industry sales are still a long way off last year. And I mean, that's after April was really bad. March was, you kind of rough. But May is just horrible. And then you think about, well, what's June going to be? What is July going to be? What is August going to be? Who knows where the numbers will shake out, but they're going to be down, and they're probably going to be down still double digits, if not 20% plus, if not maybe potentially 30% plus. Like, the auto numbers are rough, and that's definitely a big source of income and money velocity out there. You get those people in a new car, and the salespeople make money off that. The service people make money off that. The people that build the cars make money off that, right? It's a whole big money-making operation, and right now it's just not in a good place. Let's be very clear about that, okay? GDP now projected, this is some more good news we got today, okay? GDP now projected to fall nearly 53% in the second quarter, according to the Fed gauge. 53%? That has to be the most ridiculous thing I've ever heard in my life. I mean, I don't know if I ever would have thought in my lifetime I would see a 53% GDP decline. That is extraordinary. I mean, even if, let's say, GDP fell 20%. That is ridiculous, okay? Even a 20% fall in GDP is ridiculous. Like, you go back throughout history, and good luck finding another time period where GDP declined, 20% quarter over quarter. Like, that's just ridiculous. Never mind a 30% fall. Never mind a 40% fall. Never mind a 53% fall in GDP. I mean, guys, what the heck is going on? I mean, you just look at all this, and it's like, how is the stock market right now near all-time highs? It makes you just like have to rub your eyes and just say, how is the stock market right near all-time highs with this gauntlet of just bad news, okay? Look at this chart. This is going to show you the projection of how bad GDP will decline. Oh, guys, that is awful. I mean, Q1 of 2020 was awful, -5%. Let's be very clear about that. That is extraordinarily bad, okay? -5%. But when you talk about a 10x that, a 50% plus decline, you're on a whole different scale now, okay? A whole different scale like we've never seen before. And that essentially means money velocity. Okay, money velocity, let me explain it like this. This is a normal situation for money velocity. There's you watching this video right now. You decide you're gonna go out and spend some money at the local restaurant today, okay? You decide you go down there by yourself and you spend a little money, and you get a drink and you get some food and you spend a little money, and that's great. That money is spent out there, and the restaurant owner makes a little bit. The waiter probably makes a little bit, because hopefully you tipped a little something, right? And let's say the busboy or the cooks, they make a little money as well. So several different people are really getting a piece of that money you spent out there. Now those people, they go out and spend that money out there, and a bunch more people indirectly or directly make money off that money being spent than those people, and the numbers just get bigger and bigger and bigger. It's money velocity, and it just keeps getting bigger and bigger, and this person goes and spends with this person, and just because you spend at one business, there's so many different people that make money off that the money velocity is just amped up out there, and then it's compounds and compounds and compounds. And that's in a normal situation. But now in the current environment where we see GDP declines of 50% or whatever, right now the money's just not being spent out there. Instead of that person saying, I'm gonna go to that restaurant, they either can't go to that restaurant, or they choose not to do so, or basically buy this or buy that, and so the money just stays with that person. And the other people are out there saying, hey, can you please spend some money out here so we can get some money velocity going, so we can go spend some money with other people? And it's just not happening right now. It's simply not happening, and it's the worst. It's the worst thing for an economy. When you stop money velocity, there's nothing worse for an economy really than when you stop money velocity. It's pretty much, if you think about the 2 or 3 worst things you can do for an economy, it's just stopping money velocity, because it's so detrimental. And that's why you see massive GDP declines, massive unemployment, because money's just not flowing out there. And if money's not flowing, how is money going to keep flowing? It's something that makes itself worse and worse. It's like dominoes falling the wrong way when you get money velocity going the wrong way, okay? The Atlanta Fed anticipates personal consumption expenditures, which make up 68% of the nation's gross domestic product, to fall 58% in the April to June period. Gross private domestic investment, which accounts for 17% of GDP, is now projected to slide 62.6%, okay? So we know the US economy specifically is really built upon people going out there and spending at services, okay? And there's always like a joke about the US economy. It's like, how do we build an economy where people just spend money at Starbucks, essentially, right? But that is the US economy. It's all people spending on different services and whatnot, and that's an oversimplified, way to kind of look at it negatively. But at the end of the day, it's just folks, spending money with this business out there, that another person spends money, and it's a consumer-led economy, and that's what we have in the United States. And usually it does very, very well, except when you say people can't go outside and they can't spend money and things like that, and you just completely destroy it. And these numbers are astonishing. I don't, hopefully we never ever see numbers like we're seeing right now ever again, because it's just sad, okay? It is just sad. Now, just while I was prepping those slides, look at, now we're 5 minutes till the market closes. So the market closes here in Vegas at 1 o'clock, okay? 5 minutes till close. Look what the Dow's up now. Isn't that a little weird? All of a sudden, Dow's now up 221 points, S&P 500 now up 0.66%, NASDAQ now up almost 0.5%. Wow, isn't that weird? Here we are right at the end, and there's all this buying pressure out of nowhere right before the market closes. Interesting. Let's keep an eye on that, okay? Over 40 million, this came out this weekend, over 40 million Americans have filed for unemployment during the past 2 months. Real jobless rate over 23.9%, okay? The jobless rate is somewhere around 24% right now, guys. These are numbers you just can't make up. Like, this is extraordinary. Extraordinary. And if you want to wonder, like, why are things getting even more heated than in the past, at the end of the day, and you have a lot of people frustrated about a lot of things, okay? Including the economy and, being cooped up and not having jobs now with a 24% jobless rate now. And you're going to have a mass frustration out there. And if you want to think about unrest that might continue on, when you're talking, this is one of the good things about a strong economy is people are busy and they're working and they're doing things. And generally speaking, things are relatively peaceful. But I can tell you, if all of a sudden you have 20%, 30% of folks unemployed all of a sudden, and a lot of these people want jobs, you're going to get into a really volatile situation that could last several months, okay? That's what ends up happening. And here we are with this headline: stocks jump as Wall Street focuses on economy reopening. S&P 500 now up 40% from March lows. 40%, guys. We're not talking about a market that is down and out. We're not talking about a market that's just still, kind of trying to come back a little bit. We're talking about a 40% gain in just a little over 2 months? That's extraordinary, okay? On hopes of the economy reopening, okay? And here we are. Here's the final numbers. Market just closed, okay? And look what we're at now. Dow Jones Industrial Average went up 267 points today, over a 1% move. S&P 500 went up 0.82%. NASDAQ went up 0.59%. And I just have a question for you guys. Who was buying right in that last 10, 15 minutes of the market being open, where the market just kept going up and up and up and up? Like, we need some massive buyers out there. We're not talking about some guy, who spends 10, 20K in a stock, okay? We need some mass buying. We're talking about pushing these S&P 500 companies up, these Dow companies up, companies with, tens of billions, hundreds of billions, if not $1 trillion+ market cap. Who was pushing the market up right before the close? I think this is just a fair question. Who was doing it? Because this seems to be happening almost every day. Right before the market closes, the market pushes up and up and up. And sometimes we'll see futures push up just for no reason, out of nowhere, just futures pushing up. And so the market starts out green, then sometimes it will kind of weaken, and then all of a sudden magically, right before the market closes, a bunch of buying pressure comes in. And it's just like, where is that buying pressure coming from? I just think it's a fair question. Nobody can really answer that as of right now. And here we are looking at the NASDAQ that's within 200 points of an all-time high. I mean, you can't make this stuff up, guys. You can't make this up. You look at the GDP, you look at unemployment, you look at corporate earnings, awful. You look at any news is bad news right now. And the market doesn't care about anything. It just keeps going up and up and up, okay? And, oh, okay, here we go. Well, Jeremy, the market's just looking to the future, okay? I get so sick of hearing that, to be honest, okay? I get, somebody has been in this market for 12 years now. I can tell you most of the time, the stock market looks a little into the future, but it doesn't look very far. Let me be very clear about that as somebody that's participated in this market for 12 years. The market will look a little into the future, but it doesn't look too far, okay? Usually the market kind of looks at mostly the current situation, okay? Let's be very clear about that. But if we're saying the market's looking at the future, the Nasdaq's at all-time high or getting close to an all-time high, what future is it looking at? Is it looking at 2021? Is it looking at 2022? Is it looking at 2023? Because I can tell you, if the market's looking at 2021 earnings, it's probably not looking at the right thing. Because in my opinion, 2021 earnings for most of these companies is not going to come back to 2019 levels just in a snap of fingers. I don't think that's happening. I don't think that is realistic at all for a lot of these companies, and especially with the dramatic situation we have going on out there. And so in my opinion, if you're thinking about, the market getting back to where it was as far as corporate earnings go, you're really going to push out to 2022 or 2023. And I can tell you, the market never looks that far into the future. It doesn't. Like I said, I've been in this game for 12 years now, and not one year has a market ever been focused on what's going to happen 2 or 3 years from now. That's just not what the stock market does. Maybe the stock market can look out to 3 months from now, 6 months from now, maybe 9 months from now, but the stock market in general doesn't look to see what's going to happen in 2 or 3 years, because you don't know. You don't know what's going to happen 2 or 3 years from now, so it's so unrealistic for the market in general to focus on what S&P 500 earnings could be in 2022 or 2023, because no one has any clue. The market has to focus on 2021, and when you're pushing up against all-time highs and earnings probably aren't going to be anywhere remotely close to all-time highs, you're just sticking yourself in a really tough situation, okay? And I say this, why was a public account up $1,000 today? In all seriousness, it was up 18,000 yesterday for no reason, literally no reason, and it's up another 1,000 today. Why was today not a day where it gave back some of the gains? Tell me why. It doesn't make sense, okay? It doesn't make sense for that account to be up again. And this is us every day right now. We just laugh at this market. You open up your iPad or your iPhone or whatever, smartphone you have, and you go on your stock tracker app or whatever app you check stocks, or you go to your brokerage account, and you just look at it and you can't do anything but laugh, honestly. Because if you try to take this stuff serious right now, it's just going to frustrate the hell out of you. That's all it's going to do, because and this is coming from a lot of us longs are frustrated. A lot of us that have, ridiculous amounts of money invested in this market, we don't feel comfortable with the way the market is acting right now, okay? And I think that's just something to take into account. And all you can do is you just got to laugh at it, because it's funny at this point. Market goes up every day off nothing but bad news, and it's just you kind of have to laugh at it, okay? And I understand, let me be very clear, I understand the folks that say stocks only go up movement, okay? It's like its own movement, okay? Stocks only go up, stocks only go up. This is what people have obviously said, and I can understand the movement, considering the fact that the market's gone up almost every single day, it seems like, since what, 2.5 months ago. And so when you get into a market where the Nasdaq jumps 3,000 points, 3,000 point jump in the Nasdaq in a matter of about, less than 2.5 months, when you see something like that, psychologically your brain just starts to get trained like it just keeps going, it just keeps going, and it just keeps going. And you just start thinking nothing bad can happen. The stocks are just going to keep going up. The Nasdaq's just going to keep going up. The S&P 500 is just going to keep going up. Valuations are just going to increase and increase and increase. And it's natural. It's your brain. If your brain's recognizing something's consistently happening, it's you just start thinking this is going to consistently keep happening, okay? And so who's to not think the Nasdaq's not going to go to 10K now, 11K, 12K, 15K, 20K? I mean, at the end of the day, if the market just keeps going up, then your brain's just going to keep telling you the market's going to keep going up. It's just what makes sense. And so who's to say that's not going to happen? Because if the market doesn't make sense at 9,600, is it going to magically make sense at 10K or 11K? No, it's just going to still make as little sense as it does right now. And so the thing I can tell you guys is this is a very dangerous market, in my opinion. In all seriousness, we can laugh about this, and the market just keeps going up day after day after day, and with all this bad news, the gauntlet of bad news. But in all seriousness, it's a very dangerous market. It's the most dangerous market I've seen in my 12 years being in this. It's the most dangerous. I want to be very clear about this, okay? Valuations are sky high, and we have massive amounts of good news priced in. Ideally in the stock market, you want to be in a stock market where there's no good news priced in, because it usually means you have massive upside potential if good news starts to come. Right now, I feel like just about every bit of good news has been priced in. When you look at where the S&P 500 is standing at, when you look at where the NASDAQ within 200 points of an all-time high, it's within what, a couple percent of an all-time high? You have massive amounts of good news priced in. And the fact is, when it comes to valuations, forward Ps haven't been this high since you have to go back to pretty much the tech bubble. And you know, oh gosh, guys, we don't even want to associate with the tech bubble. Believe me, we don't want to be in the same conversation as a tech bubble. But literally, if you're trying to look for forward Ps that were this high in the past, you have to go back there. And that's scary and painful, okay? No one wants to go back to the tech bubble to try to compare anything. But this is a market we're in right now. And this is why I say this market is extremely dangerous. And I don't just mean dangerous in regards to like newer investors. I mean everybody in general. When you have a market where valuations are sky high and massive good news is priced in, it makes it really, really hard to find deals. I mean, extremely hard to find deals. You know, if you go back to March, yeah, there were deals everywhere, man. It was like shooting fish in a barrel. But now, with the NASDAQ up 3,000 points in a little over 2 months, you know, now it's like good luck finding good deals. It's like 1 in 1,000 right now. That's the truth. And if you're in the stock market and you're ever buying assets, you want to pay fair valuations for it, or ideally undervalued prices, right? That's how you really make the money. And right now in this stock market, we're in a stock market where the best case scenario is maybe you get a fair valuation. But for many of these stocks, and most of these stocks, let's be very clear, most of these stocks, you're paying overvalued valuations where these companies are just trading way high compared to where they should be trading way high to. And I'm not just talking about super high growth stocks. I'm talking about a lot of the value stocks out there, or even, you know, trading at some valuations that it's like, it doesn't make much sense, guys. And so I just want to say this is a very dangerous market. We can laugh at it. Yo, the market's up again. Oh, tomorrow, oh, the futures are up again. The market's up again. We can all laugh about it, and it's real funny. And, you know, we keep making money from this whole thing. But at the end of the day, you know, with the reality, you know, and the fact that the stock market is so disconnected from the reality, I just think it's, you know, it's a dangerous game at the moment, and you really have to stay very disciplined right now, and you have to keep lots of cash ready to roll. And, you know, if people want to say, well, the market just keeps going up, so I just have to put all my money in the market, you can do that. But I'm just saying, like, you know, whatever, who knows? Maybe the NASDAQ's going to 20K, and, you know, forward Ps are going to be at 1,000, and, you know, who cares then? But it's a dangerous game. That's all I'm going to say, and we'll see what happens over time. But, you know, as long as you got money invested, you're making a lot of money. And, you know, don't be afraid to take some profits. If you find some stocks that you hold that are trading at some ridiculous valuations, you know, don't be afraid to take some profits here and there if you want to, you know, build some cash position, or if you want to put that money somewhere else. You know, don't be afraid to do that, because just because the market is you know, going up right now and it continues to go up 3,000 points in a little over 2 months, doesn't mean that's going to continue forever. Okay, I just want to be very clear about that. You know, and it's weird. Who's buying at the end of the market like super heavy like that? Isn't it strange? You know, no one can give me a straight answer about that. But anyways, thank you for watching and have a great day.